Yeah, so gold, if we look at the chart here, this did come into some key support. So notice this beautiful trend line, high pivot here, low, support, support. Every time it hits this line, it's getting a bounce. And we have this beautiful downsloping trend line. And so what this is creating is what we call a wedge pattern. Wedge pattern squeeze price tighter and tighter until it explodes in one direction. Now, listen, if it breaks above this trend line, which currently sits around 4,300, then I honestly might say to you, we might not get to 3,500. We might have broken out. But on the vice versa side, if we break this 3,090, 80 level here, we probably trade down to this major support at 3,500. To me, that would wash out the weak hands that we were just talking about. People that bought gold thinking it was a get rich quick meme coin, when in reality, it's an insurance policy against all the crazy stuff we see with fiat and these governments out there. But right now, I'm still leaning towards the downside. I don't think we've been fully flushed out on gold yet. And I will say this, and we talked about this just before we went live, Michelle, is that, once you're below 4,000, at this point, between 4,000 and 3,500, it becomes a rounding error. I believe gold is going to 10K, probably at the same time as silver's at 200 or so. And so if that's the case, what does a few $100s mean at that point? In other words, once we're below 4,000, as we go down, I'm just going to have buy orders every $100, a little bit, a little bit, a little bit, and just start accumulating for that longer term horizon move that I do see coming. And again, how do you not like physical gold? I mean, physical gold is the way that for thousands of years people have said this is real wealth. Governments have come and gone. Civilizations like the great Rome has come and gone, and you still have gold as a store of value. So I think from now on, you below 4,000, it's a buy. Yes, and it's always important to kind of not focus on the shiny thing in the room. And right now, Micron is the shiny thing. We see it right in front of us, right? Here it is. Today, it made a new all-time high. Couple things to note is that ultimately they are projecting out all this grandiose promises about AI demand for memory. Prices are going to stay at crazy levels with margins at 85, 90%. I don't buy it. And I'll tell you, we're already seeing other companies starting to pursue DRAM and memory production. We're seeing other plants being built. And granted, that's not going to come online for a year or two, but it will come online. And these things are cyclical. You will see Micron down 75% within the next 12 to 18 months. And keep in mind, Micron's the shiny thing, but look at NVIDIA. All right. Is the AI trade really okay right now? NVIDIA just made a new low today with Micron going up, 15%. We have NVIDIA down today on the day. Look at Broadcom AVGO. AVGO is down 20% off of its recent highs. And a lot of these other AI stocks that were hot just a week ago have stalled out. MRVL, take a look at this one. MRVL still hasn't been able to push back up and barely closed green on the day. And so, granted, Micron, they were awesome. That move is incredible for a $1 trillion+ company to jump like that. But if you look at the underbelly of the bigger players, not the shiny thing, but the actual real backbone of the AI trade, it is starting to falter, and eventually it will spill over to Micron.
Did you say Micron down 75%?
Oh yeah, absolutely, and that'll be kind at this point. I mean, that'll happen. And again,
talk me through that. Show me that on the chart.
Okay, let's talk about this. All right, so let's go to Tesla. Now, Tesla, this is a great example. In 2021, Tesla was the equivalent of Micron, the hottest stock. I was trading this. I was shorting it up in this range. I was getting crushed on my short. It was trading up here. It kept on going up and up. Kathy Woods with her crazy valuation saying it's going to go up here, 4,005, whatever it was. And look at what the drawdown was. And this is very standard. You look at this, 75% drawdown between the peak of 2021 and the low of 2023 in January, basically 1 year later. You go to Amazon. Amazon, if we go back to the 2001 bubble top right here, we go back here. What was the drawdown on Amazon back then? And you can go to Cisco. This was 95%. But if we go to Cisco Systems, which is probably a better comparison from the dot-com bubble, look at the drop on this thing. And Cisco Systems, by the way, fantastic company, but it still dropped 86%. And so people have to understand this is, for me, Micron is literally oil at $120 a barrel right now. All right. And it's silver at $120 an ounce right now. And you will see the drawdowns of going back to silver heading to $50. Oil obviously came back to $67 to $70 here. That is Micron's future. Again, I don't know if it'll go a little bit higher first, but it will come down. I mean, look at this chart, Michelle. Like, how ridiculous is that? I mean, this stock is literally up from a year ago. It has rallied a massive, and let me just get my trend tool here. It has gone up 1,800%. And so that is just not the reality. That's a meme coin. And
Mhm.
so again, you could say, well, there's real demand. All of these factors doesn't matter. It's emotion driving price, and it's cyclical. And then when the cyclical side comes down and there's plenty of memory, margins are going to go back to 5 to 10% from 90%, and these things will crash down 75%.
Gareth Soloway called oil's rally and crash perfectly. Now he's looking at silver at $50 to $54. Buy zone. Gold at $3,500 is the target before the next leg up. Micron will crash 75% within 12 months. The AI trade is a bubble about to pop. Passive investing creates exit liquidity risk. Bitcoin to $50,000, then maybe lower. Stagflation coming late 2026 into 2027. The Fed will cut rates in Q1 2027. That's when markets really sell off. Buy staples and high dividend stocks. Sell the AI hype. Accumulate physical gold and silver on weakness.
Yeah, so the key here is, and listen, I know I upset people by talking about it going down to the 50-ish level, give or take. Number one, it's almost there, and I'm starting to get ants in my pants to buy silver, right? So the first key level is this pivot point here at 54. That'll be first support. I don't know if it will hold, but that'll be starting where I start to nibble. And then really at a pierce of $50, that's where I want to buy. Now, the rebuttal I always hear, right, is that, oh, but inflation adjusted, silver should be so much higher. You're 100% right. But remember, folks, silver, gold, that in the short term, things move on emotion, which is right now fear, and that drives price below where it should be. And just like greed, when we were at 120, you could argue that it shouldn't have been up there that quickly. Longer term fundamentals absolutely matter. And so again, obviously I'm looking to be a buyer on gold around 3,500, and we'll look at that in a minute. But silver around this $50 level, we're now getting in a range where I feel comfortable that it's at a discount to where it should be over the longer term. And I'm starting to get very interested in being a buyer.
So you're going to be buying silver as you see it still moving downwards, but where does it go from there?
So I think that again, you get in this 50, 54 to 48 range or so down in this range. And by the way, where am I getting that lower range? That would be revisiting our 1980 highs as well as our 2011 highs. And just in terms of a quick lesson in charts, when you have a trend line that is hammered on in technical analysis and it finally breaks out, there's this inevitable want for it to come back to home base. Think about a kid who goes away to college and then they come back and live with their parents after college, or they come back for Thanksgiving or Christmas, right? There's just that inevitability that it oftentimes comes back to that level. And that's what silver's doing. Very normal human psychology reaction. After that, we start our next trek up. I think that's where the fundamentals over the next year or two start bringing silver back up towards the 90, 100 level, eventually taking out 120. And I still think 150 within by 2030, 20, even $200 is very doable on silver. Again, I'm not looking for these parabolic moves like we saw here, but just fundamentally, you can make a case that eventually it revolves around that 150, maybe even 200 level.
You're saying $200 silver, but by 2030.
Yeah, and again, when I project out so far, right, 4 years out, 3.5 years out, it's so hard to really know. It could be by 2028, 2029. I'm not expecting silver to just rip up to 120 again after it gets to 50, right? There's a lot of technical damage. People that bought in at 100 are going to be panicking when it gets back to 100 to dump into that and say, thank goodness I'm back to my break even. That's human psychology as well. When we get crushed on a trade, we're just happy to get out break even, and you will see some of that. So it's going to have some work to do to get back to the upside. But I do think, again, once we get up there to that 120 level and break out, you'll see 150 and 200 very, very quickly again. But again, I'm giving myself a little leeway on this call, Michelle. Let's give it till 2029, 2030. That's really only 3.5 years away. It's not that far away. Yeah. And I think what we need to see is a flush out of what I call the weak hands, right? And this goes with gold as well, is that when you had people jumping in because they thought it was a get rich quick thing on silver and gold when it was going parabolic every single day, those people need to be flushed out. The old school, and I, not to date myself or whatever, but those of us that have been in gold and silver since the the teens, the early 2000s, we understand that gold is a safe haven. It is meant as a hedge against inflation, against the US debt continuing to climb. And eventually it will play out in the long run. But we can't expect it to go up 100% every single year, right? I mean, that's just not the way it's going to work. So I 100% agree with you. The fundamentals say eventually up, and I agree. And that's why I'm looking to buy in this lower $50-ish range. But at the same time, the fear of people that are stuck in this trade. I mean, think about how many people bought between even just $100 and $120 that are now feeling the pinch, that are getting ready to throw in the towel. And so that's the fear. The fear is it's not the sexy trade anymore. It's got to be dumped. They're going to eventually throw in the towel. And when they do, that's that final flush out. We get a bottom and then we start trading back. I think this, by the way, I think by year end, we're back to $75 to $80. So there's actually some really good upside in silver here. It's just you got to get rid of these weak hands. Wow. Yeah, and I've always been against, like, I do not like the if you're a believer in Bitcoin, you want it diversified with as many people as possible, and to have one entity owning so much Bitcoin. And there's multiple entities. I mean, if you look out there that own a massive amount, it just isn't healthy for the asset. And so it's possible that the asset tries to squeeze him and push it down. And I will just point this out. Michael Saylor was an oracle back in 2000, right? He had a tech company, and the tech company MicroStrategy was epic in terms of its run up. Look at this right here. It ran up from basically $7 to 330, and then it collapsed
Oh,
99%. Now, if for some reason he's ever forced to sell, we could be looking at Bitcoin down to 3,000 again. And listen, that's like, I'm not, I don't want to spread fear, right? I mean, that's not the point. I'm just saying that Michael Saylor has this history of kind of getting too deep in something and then just going all in. And I listen, part of it is, his belief in it is awesome, but it's also a fault, right? And we have to just remember that if any one holder, if he levers up and and he has levered up and he's forced to dump his Bitcoin, then who's to say that MicroStrategies doesn't go down 99% again and Bitcoin doesn't fall back to 10K? I mean, it is always possible. I don't think it's likely. I want to be clear on that. It's not I wouldn't be buying at 50K if I thought it was likely. But these are the risks when one holder has that much Bitcoin and they lever it. That's a risk. That's absolutely a risk.
do you see a scenario where Bitcoin goes to zero?
Oh man, I don't. It doesn't mean it can't happen. Remember, I'm only right 70% of the time, give or take. But I don't. Again, maybe call me a sucker, or but I'm a believer in Bitcoin. I think it's an alternative to
Mm-hmm.
fiat. It's a way for wealth to be preserved in addition to gold and silver. But again, there's always a chance. There's always a chance of anything.
All right, give me your bullish case for Bitcoin
Bullish
from where
case
we
for
are now.
Bitcoin, this would be the bullish case, is that we see an unwind in the AI trade. And as it unwinds, people start to worry about more printing of money as the US economy slips into recession, more debt being added on. And people start to say, okay, we got to go back to gold, silver, and Bitcoin. And you see a money rotation from semis, which have, I mean, think about the trillions of dollars, like tens, hundreds, I mean, so much money in semis. You take 1%, 2% of that money and put it back into Bitcoin, and Bitcoin's back to all-time highs. And I think that's what us as bulls have to hope for. Ooh, you always put my feet to the fire. I mean, listen, I still think that there's going to be a lot of volatility in Bitcoin, and I still think a flush to 50 or sub 50, just below 50 is likely. But I do think that there will be a day where all of a sudden things turn around
Mm-hmm.
and people start looking at the Fed starting to be doing these kind of quantitative easing things again. I mean, think about this: is generally, during bull periods and good prosperity, the US pays down its debt. Instead, during prosperity, we've only run it up. When do you run up debt as a country? When you're in a recession. But we haven't paid down our debt. So it's just going to skyrocket even faster at higher rates now. And that's the case for Bitcoin, and that's the case for gold. And I think, unfortunately, I think that's a very likely outcome here. You have people going back in the central banks to what worked before, printing money, and
Mm-hmm.
it's going to cause a lot of hardship for a lot of people, though. So number one right now in terms of upside, that's definitely the high dividend payers in the stock market that have been forgotten and left for dead because that no one wants to play ball with them, even though they pay a great of dividend. And they're in industries like food where you're not going to see, like, people can choose to not buy the latest tech, but they still got to eat, right? So that gold, silver, and then Bitcoin if it flushes to 50K, big buyer. But gold and silver, gold below this 4,000 down to 3,500, I love it. Silver at 50. Oh my gosh, huge level. I've been waiting on this level since it ran up to 120, and we're basically getting to be there.
And we probably have covered it, but in terms of encapsulating this in a final sentiment here, is there a widely accepted narrative right now that you think collapses in 2026?
Absolutely. And I think that goes back to the AI story, how, these companies are priced as if CapEx will only go up, it'll never come down, as demand will only go up, margins will never come down. And that's just not the case. Look at anything historically, and you could say this time is different. I've heard that way too many times. I believed it early on, and I always got burned on it. So just be aware that things will end. It's just a matter of when.